Just how far can this rally go? Let's ask top wealth advisor Cheryl Young of the Rockefeller Global Family Office with me back here at Post 9. Nice to see you again.
Nice to see you again.
You have
Scott.
a good eye on the market. You always do. That's why you're in the Barron's Hall of Fame. That's why you're one of Barron's top 100 wealth advisors since 2014. So now we are relying on this knowledge, these accolades. Where are we going from here?
You know, I think the market is priced to perfection right now. I mean, we just hit all-time highs today, which is exciting to be on the show today. I'm a little worried. And the last few shows I've been on, Scott, I was very bullish. I was doubling down on tech the last time we spoke in October. And valuations are a little bit stretched, so things are priced to perfection. One of my favorite names, I can't mention individual names, is down sharply in the day, semiconductor stock. So any kind of...
Might start with an N, but we won't mention any names. I think I know where you're going here.
Any kind of shocks could cause some pretty big pullbacks here. So I still love most of these Magnificent Seven names.
Okay.
But I'm adding protection right now. I'm a rock climber, and I like to think of the markets as you get up higher in the wall, let's just put a little gear in and keep us safe.
Do you think the market's just gone a little too far, too fast since the October low?
You know, I just don't see that we're going to get 6 rate cuts this year. I'm guessing it's 3. I don't think it's going to happen in March. I don't think it's going to happen until at least June. And the markets are really looking for these rate cuts to extend the rallies. But while we have to watch earnings, of course, we just started off earnings season. It hasn't been that impressive.
We're just getting started.
Just getting started. And look, big tech starts barely on the 24th, and then really next week is when we're really going to see the numbers come in.
Let me ask you this. So you talk about rate cuts. Does the how many really matter? Or does the trend that they're going to be cutting matter most? And by the way, Goldman Sachs today, Jan Hatzius says first one's going to come in March. Now, I know there are those who think the market's way ahead of itself on that perspective. But again, why does the how many matter?
I think it is really important that we don't have too many. Because if you had, let's say, 6 rate cuts, you could start arguing what is the economic data that's supporting that. And that could cause a fear infusion into the market as well. So I think the rate cuts happening is very good for stocks. It continues the growth story. You know, there's a lot of areas that have not, as you know, participated in this market rally. So we're really hoping to see some broadening. We saw it a little bit in Q4. Mm-hmm. If you look at the Mag 7, in fact, if you pulled them out of the S&P for just Q4, you would have done better. So we saw some broadening, and then that has completely reversed year to date.
What if that broadening was, in fact, a head fake? That we're going to go back to that same playbook that worked so well in 2023 for a variety of reasons. Economic slowdown, balance sheets that are just better than everybody else's. You can count on the growth more. You're willing to pay a higher multiple for all of those things that we love those stocks so much for.
Well, if you're willing to pay a higher multiple, you are paying a higher multiple right now. That is for sure. But look, the margins are almost double. If you take the top 10 names, almost double on these names than the entire other 490 names on the S&P 500. So there's reasons why this trade is crowded, but I'm concerned it's getting a little bit too crowded. I would love to see small caps, which, you know, were down 5% last week. I think they're down about 2.5% as of today, year to date. But look, small caps were up 12% in December. And again, we started to see some signs of life there. There's a lot of potential momentum on those smaller cap names, and they could do better than large caps this year.
But you still think we're going to have a good year? I mean, you came in here, you know, the first words you said were, I'm a little worried. But you still have a pretty good outlook for this year for the market overall, right?
Oh, absolutely. Look, I think there's still a good story for stocks. Election years typically are positive years, and especially when you have an incumbent running again. So just statistically, based on that alone, we haven't had a negative election year with an incumbent running since 1944. So that bodes well. You have to watch the earnings. You have to watch what's coming out in terms of the estimates. A lot of large cap CEOs are actually downgrading guidance outside of technology. It's really only in technology we're hearing upgrades in terms of the earnings outlook.